time to shift focus to Happiest Minds. The stock is buzzing after posting a strong set of quarterly results, with AI and analytics leading the growth momentum now. To understand the company's action plan for FY27 and guidance going forward, my colleague Puneet had an insightful conversation with the management. But before we get to that conversation, Neeraj, the entire IT pack seems to have found some salvation.
Yeah. I call it the anti-AI trade or call it something else. But you could almost argue, Tamanna, that it started with the kind of display that TCS did, isn't it? Because the stocks had not done too much until then. Then TCS commentary, their confidence about acceleration in Q2, I think it really revved up all of that. So it'll be really interesting to hear from Joseph Anantharaju, who is the co-chairman and CEO of Happiest Minds, as well as Venkatraman Narayanan, who is the managing director, about what is it that Happiest Minds could do in the quarters ahead and whether they are as confident about the outlook as some of the other peer sets for Happiest Minds have been. I think a digital first company will be really interesting to see what is it that their take is on what happens going ahead. Here are a slice of the conversation that they've had with my colleague Puneet.
Hello and welcome back to NDTV Profit. We are putting focus on Happiest Minds now on the back of their Q1 results. The revenue grew 4% on a quarter-on-quarter basis. Margins have held through at 15.1% in this particular quarter, while net profit has also grown as well. But to talk about what they are currently seeing on the ground, joined by the management here, Mr. Venkatraman Narayanan, he is the managing director of the company, as well as Joseph Anantharaju, the co-chairman and CEO of Happiest Minds Technologies. Gentlemen, both of you, thanks so much for joining in today. Let me just start off with some interesting comments that and something that you both have also emphasized, that AI is not a disruptor, it's rather an opportunity going forward. Mr. Ashok Soota, of course, the co-founder, has mentioned that in the press release too. It's something that a lot of IT companies have been trying to tell us as well. So how are you looking at the AI opportunity now? If you can give us some perspective, because you don't give out specific AI-led revenue, but you mentioned that the pipeline has actually grown quite decently in this particular quarter. So what has been the advancement of the same that you've seen in this quarter, and have that also been visible in the new deal wins that you've reported?
Yeah. So if you look at AI, Puneet, the way customers are leveraging this technology is threefold. Right? One is they're looking at how do we use AI to give a better customer experience or new functionalities that will drive additional revenue. The second area where we are seeing quite a bit of focus is on how do you optimize your back-end operations, whether it's finance or customer support, HR and other functions, or it could be even supply chain. How do you really use AI to make it more efficient and reduce cost, increasing productivity? The third area has been on the software lifecycle, and we are seeing a huge push in the last 6 to 9 months, where customers are promoting and expecting, I would say, that we use these tools. Increasingly, it's becoming more of your Claude or Codex in an agentic AI approach for, rather than just using Copilot as an assistant, and expecting the productivity to help them, find money to invest in innovation or modernizing their current tech stack, addressing tech debt. So all of these we see as opportunities, and we have in our pipeline opportunities in all of these three areas where we're working with customers. But I would say that the last 3 to 6 months, there's been quite a bit of push on how do we really, include or use these tools in the software lifecycle.
Also, just the perspective, and I think we spoke about it in our last chat as well, that you've gone ahead and actually raised the constant currency revenue growth guidance. Of course, the street also liked the same as well. The question now being that, was Q1 enough in terms of the part towards that 12.5% kind of growth that you had envisaged, or was it slightly more lesser? Because the numbers that are in front of us show that there'll be a lot of work expected to be done in quarter 2 as well as in H2. But as mentioned, that H1 is very strong for the IT company. So are you satisfied with the growth that we see in quarter 1, or is it more back-ended on some of those pipeline conversations that we might see on deals for you?
If you look at the growth that we have done in constant currency year over year is about 6.7%. Yes, slightly. It leaves a lot of work to be done in the subsequent quarters and in the second half. And you're right, the health in the pipeline and the deal signups that have happened right now, those are the things that we are really banking on to make sure that we get back into that growth cycle for the rest of the year. But there is also Artha Banking. Artha Banking is sort of lumpy business. We did have a blip in the last quarter in terms of 2 deals moving into this quarter. Out of that, we have not been able to close 1 deal. That's the nature of that beast. So, but we are seeing a decent pipeline in Artha Banking as well, and that's also something that's being factored into our subsequent quarter. So you have your growth expectation from your existing accounts, pipelines adding up, and the product business that's slightly lumpy coming in to help us meet those numbers in the subsequent quarters. And you've got platforms like EduWeave that Joseph just talked about. We are building our own industry agnostic AI platform, and there is quite a bit of expectations from that also taking you into not only new accounts, but also having that non-linear revenue adding to our growth. Yes, it is. Our work is cut out for the subsequent 3 quarters.
And just one question on your, as we look at you, we spoke about the verticals part, but the digital service offerings that you also have now, the AI as well as the analytic units, I'm guessing that has a lot of those newer businesses that we spoke about. Constant mention, I think the last big change was in FY24 when we saw that, and then has been largely stagnant. But now as things have changed over the last couple of quarters, you've had some time to look at it. Is there any expectation of where this numbers might go, either in terms of quantification or just the general sense?
See, the AI and analytics number that you're talking of about 11 to 12% is a service offering split. But if you go back into history, what we did is we gave you that split to show that we were 90% or 95% of all the work that we did was digital and digital only. That was the background to it. Now, in the last 1 year, we have got this new angle of AI. We started it out as a new business unit in the early days, which is GBS. But what's happened is AI is leading most of the work that we do, whether it is in security, whether it is in cloud, automation, analytics, and the like. So that's why the metric of AI-led service is something very important. We will be publishing that we said in the first 2 quarters, Q1, Q2. We are getting those numbers together because we don't want to come out and because it's going to be something that we'll report on an ongoing basis, like whatever metric that we have done until now. But suffice to say, that's a large number, the AI-led number. So AI, the analytics piece that you're seeing is as a percentage remaining constant in line with the growth that the company has shown over the last 3 years. You should compare it from that standpoint. But most of the getting into the AI-led, and it's getting into the other slices of the technology that we are reporting.
Sure. And another angle, Puneet, just to add a little bit out there, the 2 additional angles out here. Sometimes you have AI which is being delivered in the cloud. So the classification may happen under cloud, right? So that's one part. But the second part, which is very important, is when you're doing an analytics or AI project, right? There would be testing, or there would be some front end that you would do, maybe some deployment. All of that we're not counting out here because we're only looking at this is a people-based quantification. So if you look at it from a project standpoint, that number would be much higher. And as Venkat pointed out, we will come back with that number in Q2. We have the number for Q1, but we want to run a little bit more, test and checks on it to make sure that it holds. Because as you know, this is something that we want to report on a quarterly basis going forward.